Okay, so the Federal Reserve balanced interest rates 1/4 point today. How's that going to affect cryptocurrencies and affect the financial markets going forward? And how's that going to affect real estate? Let's talk a little bit about that right now. One more day with DeFi IoT. I want to talk today about the Fed bumping interest rates for the first time, really, 2 years? 1/4 point, 0.25%. Also stating that they anticipate that this might happen more throughout the year. We're hearing 7 times more, or 7 times during the year, 5 times during the year. We'll see how that plays out. We can't really calculate that. The fact is they did bump interest rates. And there's a lot of factors taking place in the market. So I want to explain how that's going to affect you and I in the crypto market. Well, first of all, how did the crypto market react today? Well, just yesterday you had reaction to Vladimir Putin's comments basically stating that, the Ukraine-Russia negotiations were actually advancing, that Putin was feeling positive about this, which means that Ukraine war with Russia could actually come to a close. However, you're still going to have those sanctions that Joe Biden and European countries place on Russia and on Russian oligarchies and Russian citizens, really. You're going to have that repercussion. You're also going to have the repercussion of the bank seizures of money in Canada just before all this took place. You also have something they're trying to get us to forget about, and that is the fact that during the times that we were shut down, especially over the last year, there was a lot of free money handed out in order to try to spur the economy. Well, those people didn't save that money. They went and just spent that money. I know. I traveled around. I was in Vegas. I was in South Beach during that time for business. Happened to be coincidental, and it was just crazy of the amount of people and the kind of people I saw there that don't normally frequent there. I'm not saying they don't have a right to be there. I'm just saying because they had free money. Now, I know that the rates and prices, for example, in Las Vegas, and the money they were getting was not enough money, generally speaking, to cover their trip and their gambling and their play, especially all the nice cars were being rented in South Beach. So I think they're putting a little on the credit card, which brings it up to, in the U.S. right now, we have basically about $6.5 thousand on average for the American consumers. That's the average debt that each one has right now. So what's that mean? Well, basically what it means is this. Your credit cards, most of them are adjustable. Your banks also have adjustable rate mortgages, ARMs. Also, what banks will lend now to get your loans will cost you more money. So your credit cards, you already have money on right now, could actually next month, you'll start seeing a rate hike in those fees. So you're going to start seeing you're going to start paying more money. Now, it's only 0.25%. That 0.25%, though, is what banks charge other banks to lend money, right? So if one bank has a bunch of money, another bank needs money, then they lend that money to another bank, and that's what they charge between each bank. And there are different categories of banks. That's a whole other video. So in brief, what's that mean for us in crypto? Well, the crypto market, from Putin's comments, responded well. Jumped to around 40,000. Bitcoin did. Ethereum, as well as others, were in the green. Today, after the rate hike, you see another move, strengthening cryptocurrencies and Bitcoin, about 100,000, about 41,000. As a just recent check, you're seeing a lot of them in green today. So if we're looking back, you're going to see a lot of green here on my wallet. A lot of green today. In fact, every coin I'm following is in the green right now. What's that mean right now? Okay, how's that going to affect us? Well, right now it's only first step. As time goes on, though, this could actually hurt us even worse. Why? We're in a different situation now. I'm watching these people give financial advice and so forth, and financial advisors on YouTube, and I think they have really good reason, but they're out of touch with reality of what's taking place right now. Being the fact that I live outside the United States of America, I see also how things are affected outside the U.S. Will this affect banks internationally with this rate hike? Most probably so. And some people say, well, indirectly. Well, no, that would be directly as well. Because what you're going to see here is you see interest rates rise here, you're going to most likely see them start to rise other places too, because there are other places in the world, in fact, most places in the world right now, are seeing rising prices. Why? Because most governments do the same thing. They spent money they didn't have. They put themselves into higher debt. Our national debts are the highest they've ever been right now. I can't remember what the number is off the top of my head now. So we have this factor. We have the fact that the U.S. couldn't even pay their debts. They keep having to raise the debt soon to pay their debts. Well, this never happened like this before. The U.S. has got the highest amount of debt it's ever had right now. So consumer debt internationally is also very high. So if you start seeing rate hikes, you're going to start seeing defaults on credit card payments. You're going to start seeing defaults then on your mortgage payments. So then eventually what you'll have now, instead of a shortage of housing supply, you'll have more houses come into the market, which I really think is what the government wants to happen anyway. Remember, the 2030 agenda by the World Economic Forum, the goals are with all those 90 countries or plus countries that are on board with the World Economic Forum is that you will own nothing and you will be happy. So now the rental market's going to increase, especially this generation now that's coming up and wants to buy a new home. It's going to be even more out of reach now. Because housing prices probably won't come down yet. But yet to get a loan, it's going to go up. So you're going to have a while until maybe that might adjust. And it may not ever adjust if you have the government buying up the houses. So if you have the government buying up houses, they're just going to continue to go up in price and keep it out of reach. And I think that's what's going to happen. And actually, I'm not sure. That's why we're putting the family and the people I'm working with, a group we have, putting the house up for sale now, thinking we're going to try to get off it the next month or two and then make our move to an area where it's crypto-friendly, as we mentioned before. That's what we're doing out here. That's why you see behind me, I'm still at the mining farm, and I stay here and I go up back and forth every day and work on helping improve this. So next Thursday, photographer's coming, sign with the realtor, and we'll get our inspections done, the pest and roof and all that done to put the house and the property on the market. Now, it's not mine, but I'm involved with it, and so it's going to go into actually in our group buying land to build our mining farm on, which we're going to go heavy in GPUs, as you see behind me, ASIC mining, etc. All with renewable energy, solar panels. Going to go tow it off grid to where we can prepare for whatever's coming inflation-wise, and we can maintain our own economy. And that's how we're going to survive what we feel is coming. So, in conclusion, what takes place? Well, right now you'll probably see this is good news for cryptocurrencies. The stock market you also saw was positive today. But most likely what's going to happen is you'll most likely, not always guaranteed, see the stock market earnings start to come down because it's going to cost them more money to borrow. I know that with my son-in-law and what they're involved in, they do commercial construction, hotels, things of that nature. They have, like, he told me, I think 6 or 7 projects, or maybe 11 projects they have online coming up, and they were hurrying to run and get their financing now. The one thing he was concerned about wasn't so much a 0.25 rate hike, was more that the insurance rates are also going up for homeowners insurance, etc. And he said that traditionally what they've seen in the construction market out in California was that they've seen when the insurance goes up higher as well, then they saw a reduction in the amount of new construction that took place. Well, we're seeing all those factors line up. Let's back up a little bit. We just came off of 2 years of lockdown. The economy is not good. What we're being fed is not the truth. The economy is not good. The reason you see a bunch of jobs out there is because you have to refill those jobs. And to refill the jobs, a lot of people didn't want to go back to work. They got used to just staying at home. And you know what? There are ways you can stay at home and do your work. And a lot of people got tired of the fact that, you know what? I'm not going to work for somebody else again because if it happens again, I just get fired, lose my job, and I'll lose my house. Now I got my own business going. I'm doing it online. I'm staying here. So you're going to see the whole digital business blow up, especially the metaverse coming and so forth. And I think you're going to see that. So what will happen with consumer confidence? That's really the big factor here. In other words, how do we feel? There was always the hemline index that I always like to go back off of back in the 80s and so forth. Go out to the malls and you can see the girls, especially now springtime's coming out in a lot of areas. And you can go and watch the girls or the women, especially the younger women. How long is their hemline? The longer the hemline, in other words, the further down on the legs it goes, generally speaking, the more conservative they feel. In other words, they don't feel like they have a lot of extra money to spend on themselves. And that psychologically reflects a lot of times in the way women dress. I know that's just, they say, wow, that's not necessarily true. Trust me. I know you say that, but it actually has a bearing. That it reflects on how people feel about themselves. When we have more money to spend on ourselves, we spend more of the bling bling. We show more of the bling bling, right? So to speak. When we don't have that money to spend on ourselves, we're more conservative, we're quieter, we're more low key. Does that make sense? So go out to the malls. When you start seeing the skirts, the dresses or the shorts even get longer, then know that what's coming is that there's a lack of confidence in the future economic growth. And therefore, you're going to start needing to turn yourself more to safe havens, more traditional blue chip type areas. Now, how is Bitcoin and crypto going to do in this arena? I don't know. I think it's going to do well. That's what it's designed for. And I'm going to take that, I'm not going to say that bet. I'm going to take that investment. And I think that investment is just as high as investment as the stock market right now. Because if now we don't have all the extra money out there and the Fed is going to not shrink the money supply, right? Which this is good. They need to do that. They should, if they're going to shrink the money supply, then there's not going to be the profit margins for the companies. That means that you're not going to have those earnings that you're making in the stock market, which is going to most likely reduce the stock market. What we've got to be careful of is just being thrown into an actual recession or a depression coming off what we're coming off right now. What's going on globally with what the World Economic Forum, United Nations, and other groups want to do to destroy the economies, because if they can destroy the economies, they can build back better. Now, isn't that what this current president of the United States, his slogan is, build back better? Well, to build it back, you got to destroy it first. So we need to be careful on where they might be going with this. So where are we going? Well, I'm staying blue chips. Now, you can go gold and silver if you want to. We're going to go into silver, actually. I'm going to go Bitcoin. And we're going Polkadot, because I do think crypto is going to grow. You know, the United States basically has said they're going to legalize it. They're going to review it all, but basically they're going to get a positive tone and legalizing crypto in these centralized platforms, which most people are going to jump into. So that should give us a strength to crypto. And, you know, what's going to happen in those decentralized platforms, that's a whole other question. We maintain decentralized, and we will always maintain decentralized. Where we are in our jurisdiction and so forth is legal and decentralized. It supports decentralized. So we will stay there. What that means for us, what they're going to call us later, maybe an enemy of the state, I don't know. We pay our taxes. I'm not saying avoid your taxes, but you need to have control of your own wallet. Your own keys, your wallet. Your own keys, your crypto. Not your keys. Somebody else has control of it. Not your crypto, not your assets. And remember, the goal is to deprive us of private properties by 2030. I don't think they're going to reach it by 2030, but they sure are advancing. And that's why I think you're going to see BlackRock and others, even though they're having financial trouble, there'll be ways to work around it. There's places to get money. I think you'll see them still gobbling up houses to fulfill that agenda. So I think housing prices probably will continue to rise to keep them further out of reach for this new younger generation, so that in 2 generations, you have a majority of people just accustomed to renting, and they're happy with that. And there won't be the supply out there for them to even buy or even be accessible to buy. So I think that's where it's going to go. And I think that's the writing on the wall. You call it how you want to. Give me some comments how you think, right? And that's how not just my opinion. That's comes off of empirical data, research and experience, being international CEO. I got bit in 2008 because I did not see them coming. I should have, but I was caught up on other things, and I'm not caught up on those things anymore. I'm back to my habits of studying every day. I wasn't doing that then. DeFi, IoT. I think if we're prepared, buy down your debt, pay down your debt, especially anything that's adjustable rates. Your credit cards, all of them are going to go up. get your debt paid off. We have a goal right now. By the end of June, we get an influx of capital. We're paying off all our credit card debt, as well as get this property sold that we have. We have a loan on it. Get that sold, and now eliminate that debt. And then we have a fixed rate with our solar panels. That's funded by the state, so it's a really low rate. Great, we're jumping into that right now. At least we're hoping we still get that. We were approved for it, but let's see now, because it's taking so long for our actual city to actually allow us to have our solar panels. It's ridiculous. We've been 4 months trying to get a permit from the actual city electric to just get our solar panels put on. Then we got to go through the actual city for the actual get the permit and then have them installed. Should have been done already. So we'll see how that loan is going to affect us now going forward. How much we're going to have to pay going forward, because I think that's going to affect us as well. We were at $450 for 86 panels. I bet you we're going to be about $550 now. $550. So we'll see. Still going forward. It's still better. It will reduce our electricity by about $1,200. We're paying, let's say we pay $500, let's say it's $600. I still am going to save $600 a month now. And then when we get out where we're going to be, then we'll put more panels on and go forward that way. So pay down our debts. That's the goal this year. Now it's starting. The Fed's actually doing it. 2 years haven't done it. It's now time. Cryptocurrency has responded well so far to it. Where it's going to go long term, we don't know. What's going to happen with all these laws and regulations coming out, we don't know. We do know this. Planet Watch got hit hard. Planet Watch got hit hard by something I don't think they anticipated. Helium's been hit. MXC hasn't. MXC's actually risen. Others, Polkadot's coming back up again. You start to see an increase again in confidence in the markets. That will last probably until May. Then we're going to have that next Fed meeting, and we'll see what happens. Housing market, that one's a good question, but for some reason, because there's low supply and a high demand, I think you're going to see housing market, especially in the middle to higher income brackets. I think you're going to see that continue to grow. And actually, I'm hoping so. I mean, I'm not saying because I hope so. I actually am trying to prepare for the worst case scenario. That's why we're going to try to get off of it and put up for sale by next Thursday, just in case. Now, I'm not saying we're right. In fact, I hope I'm wrong. In fact, yeah, I do. I hope I'm not wrong, because then if things go down in value, I can turn around and buy our land cheaper. But real estate's a good investment. It is if you want to stay in it for long haul. I was in real estate in 2008, and we took a huge hit. I lost millions of dollars in real estate in 2008, 2009, 2010, trying to get out of it. It's still where we were in those countries. It still hasn't recovered. So, I mean, some areas have, some areas haven't. DeFi IoT, right now, I think we're seeing positive moves, okay? But pay down your debt, because it's going to become more expensive. And what that's going to mean now for transportation, everything else, gas prices rising, energy rising. I heard somebody else saying, oh, these guys that have their cars, they deserve to pay more for gas because they're destroying the environment. Well, what they forget is they're also paying more for electricity now, and they're going to pay a lot more for it. And actually, they're going to have rolling blackouts, most likely what's coming, so they won't even be able to move their cars and go to work. So, it's going to hit all of us. And it's going to hit us hard, because I don't think we're actually ready for it. Buy your canned goods. I know it sounds extremist, but when I was in years ago, they told me the same thing. And now look, now we're being called by family. Hey, help us. DeFi IoT, we will see you tomorrow.
We hope you enjoyed this segment of our video with DeFi IoT. Remember, we're not professional advisors. We do this as a business, as a hobby, and we study, we experiment, and we want to share it with you. If you can get some benefit from this, great. What we do is we go out, we purchase with our own money, and we experiment to see what true results are. We want you to be able to share in our experiences so you don't have to lose like we have. If you can win where we've won, fantastic. Remember to do your own research and your own homework. It's very important before you make any decisions. We will see you in our next video.